Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Palantir Technologies PLTR stock. We're going to be analyzing 3 articles today, to where the first one is titled, Palantir says first board meeting of 2024 will be in Tel Aviv, which has actually angered some investors. Because if you didn't know, Tel Aviv is in Israel, and Palantir is a large supporter of Israel, especially during this Israel vs. Hamas war. Then we're going to analyze another article titled NHS England criticized over redacted data platform contract with Palantir. So we have more news developments in regards to this NHS contract, which we predicted they will win and they already have won, except a lot of legal problems could be in store for Palantir in the future. So we're going to go over their latest news update and how this could impact Palantir's overall share price. And then lastly, we're going to be going over an article titled Get Ready, PLTR Investors. Palantir's 2023 surge was just the beginning. So we're going to talk about how high Palantir's share price could actually go in the year of 2024. So for more videos just like this one, don't forget to go and annihilate that like button right now. Subscribe if you are new. Comment your thoughts down below about any or all of these stories. Don't forget to become a member of this channel for as little as 99 cents because that's what keeps me here on YouTube. And with all of that being said, I say let's jump right into today's stories. Palantir Technologies, as you already know, is a big data and analytics company which serves both commercial enterprises as well as government clients. Except recently, Palantir has angered some investors because they are planning to hold their first board meeting of 2024 in Tel Aviv, Israel next week. And this is to show solidarity with Israel during this time of war between Israel and Hamas. To add context, Palantir has been working hand in hand with Israel for more than a decade, so they are not scared to show their solidarity with Israel to support Israel in this Israel vs. Hamas war. A spokesperson even said, "Our work in the region has never been more vital and it will continue." And this is one of the reasons I love Palantir. They have a backbone. They are a company that is not scared to rustle the feathers of investors or others. They are in huge support of democracy and they support Western allies. And for that, I give Palantir Technologies a lot of respect because a lot of other companies these days just don't have a backbone. But let's go on and talk about their NHS drama. If you didn't know, the NHS stands for the National Health Service, and this is located over in England. And recently, it's been under severe criticism following the publication of their heavily redacted contract for its Federated Data Platform, also known as FDP. And as we predicted on this channel, the contract was awarded to Palantir Technologies, which was unveiled in December. But the public and various watchdog groups are concerned about the transparency and privacy issues that this could undergird. This was a huge win for Palantir Technologies, to where this contract is going to last for many years. And the primary goal to this contract was to create a platform that will facilitate clinicians' access to patient data, aiming to enhance healthcare delivery, meaning that the healthcare system over in England will become more effective and efficient by using Palantir's overall technology. And this has drawn a lot of attention and criticism from various health data campaigners over in the United Kingdom. This has caused so much drama that some of these campaigners are actually contemplating legal action to either sue Palantir or the National Healthcare Service in England. If any of these lawsuits are officially filed and legal action is taken, this could negatively impact not only Palantir's overall public image, but it could also negatively impact their overall share price. However, I want to put investors at ease by quoting straight from the article, which says, despite the ongoing criticisms, NHS England maintains that the FDP will operate within the confines of the law. It asserts that the platform will utilize data already legally collected for patient care. Nevertheless, the assurance has done little to quell the concerns. So essentially, the NHS England is reaffirming that neither themselves nor Palantir will do anything illegal in regards to this very sensitive medical data for the vast amounts of people who are using the National Health Service over in England. And my personal take on this is, even though there are controversies and criticisms and even the threat of legal action, I think Palantir Technologies is going to be fine. If anything, this is just going to be political politics over in England, which doesn't have anything really to do with Palantir Technologies. People are just complaining about the NHS and Palantir Technologies Technologies for no real reason. So overall, I don't think investors should be very concerned about it, but I did want to bring it to your attention because the possibility of these implications could impact the overall share price. Now let's round out the video talking about where Palantir stock could be headed in the year of 2024. Some investors already think that Palantir Technologies is already trading at a pretty high price point right now, which is currently around $17, even though other analysts believe this company could surge up to around $25 during the year of 2024. Palantir Technologies is a quality business that really capitalizes on the potential of machine learning as well as artificial intelligence platforms, and that's why it's been one of the top performing artificial intelligence AI stocks in 2023, and many investors believe it could also be a top performing AI stock or artificial intelligence stock in 2024. Now, a lot of investors, including myself, think that this company is a little expensive, and I would love for the company's share price to come down a little bit because that would make it more digestible and it would make it a better buying opportunity in my opinion. Shares right now are trading at 60 times their earnings, and that would be their forward earnings, meaning their next year earnings. Some calculations even come in as high as a 70 forward PE ratio. Others have an 18 times sales ratio, which is their PS ratio, while they are also set at 80 times their free cash flow that they generate. And ideally, we would want all of these metrics to come down, because the lower these accounting ratios are, the better buying opportunity this company becomes for investors. However, if Palantir continues to grow at their current trajectory, then I actually think that these premiums could be justified. Palantir's valuation is not growing for just no reason. Their big data analytics and artificial intelligence platforms go hand in hand. So they are activating synergies within their own company, which is helping their overall customers. And since Palantir's technology is so advanced and leagues ahead of their competition, this is phenomenal news for shareholders. Some investors will still criticize Palantir because they are still very heavily reliant on their government agencies and their government segment of their business, which are their most important customers, considering that this revenue segment makes up approximately 55% of their overall revenue as of the third quarter. And this is mainly thanks to a huge US Army contract that they landed, which was worth approximately $250 million, because the US Army is seeking to utilize and scale artificial intelligence and machine learning for their own military potential. And this is great news because really only Palantir Technologies can give the Army what they want. However, I anticipate that they will continue to grow their enterprise and their commercial sales as they increase their commercial customers through their amazing platform known as AIP, which is their artificial intelligence platform. I think the sky is truly the limit for Palantir Technologies, and here's why. Palantir has already witnessed a 37% increase in commercial clients for the period, and now it has 181 enterprise clients that has helped lift their overall revenue by 23% as of the third quarter. And as we get into 2024 and further into this year, this means that they are going to grow even more rapidly to where eventually their commercial clients will overtake the amount of government clients that they have, making their commercial business even more lucrative than their government segment. And this is all thanks to AIP, because ever since they came out with their artificial intelligence platform, it has tripled the number of users just over last quarter to where it's already helping over 300 organizations which are using AIP in just the last 6 months. So there is a massive runway for the future growth of this company, and I'm excited to see where Palantir can go. On top of that, they are also going to be added to the S&P 500, considering that they have achieved 4 quarters of continuous GAAP profitability. Wall Street is looking for Palantir to post earnings of around 25 cents per share this year, which is a huge increase compared to their 18-cent loss that they posted last year. And for the year after, they're anticipated to grow their EPS up to 29 cents per share according to this article. Clearly, other analysts and professionals have different metrics for this company. But the heavy hitter that supports this company is none other than Wedbush analyst Daniel Ives, also known as Dan Ives. And he says that Palantir is the best pure play AI name. That is a huge compliment. He's talking about a plethora of other companies to where he's saying that Palantir is the number one in this regard in terms of artificial intelligence stocks. And as customers and commercial enterprises continue to wrestle with large language models such as ChatGPT-4, they are more likely to adopt Palantir's technology because Palantir's AIP platform will allow them to create large language models and run them in their own in-house private networks, which could lead to Palantir's business growing faster than ever before. Therefore, Palantir is just not turning profitable, but they are rapidly scaling and expanding, and the growth of their valuation is rather high right now, meaning that investors currently are paying a premium for this overall company. However, Palantir stock might be justified in their overall valuation, especially if they could head to $25 per share. So for more videos on Palantir Technologies, don't forget to go and annihilate that like button right now, comment your thoughts down below about any or all of these stories, subscribe if you are new, and go ahead and become a member of this channel for as little as 99 cents per month, because that's what keeps me here on YouTube. With all of that being said, I wish you the best of luck, happy investing, and I will see you in the next YT video.